Hey, this is Matt from InvestiQuant. Today is Friday, July 10th, 2020. And yesterday we saw the ES gap up above the prior day high and then sell off pretty violently as we had some news come out and ended up creating a bearish outside day on the daily candlestick. So it took out the prior day's high and it took out the prior day's low, and then it closed below the open, creates that pattern. However, when it did so, it ended up bouncing pretty strongly back to about the midpoint of the session. We had a pretty wide range, just shy of 65 points of range. So it did get a good strong bounce back to the middle of the range, but we have a candlestick pattern called a bearish outside day. And what I want to do today is just take a look at how that bearish outside day has performed historically the following session. So what I'm going to do is select all four instruments. We're going to use the setup of intraday open, which is going to be a long trade at 9:30 a.m. Eastern Time and exiting at the close 4:15 p.m. Eastern Time. This morning, we appear to be opening in the prior day range. Right now, at the time of this recording, we're down just a few points. I have no idea, though, the way these opens have been going, if we're going to be up or down by the time we open. So I'm just going to use open in prior day range this morning and not use a gap direction. If you got access to the platform, I would encourage you to go ahead and zone in on the opening direction once we get a little bit closer to the open. That may change the stats quite a bit. So do that if you have access. The price pattern that we're going to be looking at is the bearish outside day. So that is available here in the candlestick section. This is also a candlestick you could technically make using this box right here, location last open and closed. You can pretty much build out about any candlestick you can think of just using this box here and manually creating the pattern. And then next, I'm going to also add that it did not close at the bottom or top portion of the range. So we had that strong bounce into the close. So what I'm going to do is say that it did not close in the top 25% of the daily range. So that's an exclusion statement. I'm going to do the same thing with the bottom 25% of the range, because a lot of times when you think about bearish outside days, you're thinking about a pattern that takes out the high and then crashes and closes on the lows. That was not what we had. So we can kind of zone in on the nuance of yesterday's pattern by adding these two exclusion statements. And then lastly, I'm going to go into indicators, and I'm just going to add that we are in a more bullish environment. So I can say we are above a 200-day moving average and above a 10-day moving average. That will create a more bullish environment for this pattern. Then click View Results. And here we go. So it looks like the ES has 53 samples of this pattern, where you have a bearish outside day that does not close on an extreme in a bullish environment, and you open in the prior day range. The next day, NASDAQ, it's happened 72 times. YM has happened 38 times, so that's the least, and Russell 43 times historically. And looking at the win rates, none of these are bearish. So the NASDAQ is the weakest at 53. I wouldn't really call that bullish either. But none of these are showing bearish win rates historically. And the win rates for this type of thing is just telling you the historical probability of it creating a green candlestick. So closing above the open is what this is basically saying. And historically, it looks like more often than not, that pattern has led to a green candlestick the next day. So ES 64% of the times historically, NASDAQ about 53, YM about 60, and Russell about 65. So not really a bearish pattern for the next session. Looking down here, average win versus average loss. Looks like the average loss has been bigger than the average win on those historically in the ES. So it has opened some volatility to the downside when it is not correct. NASDAQ's pretty similar win-loss. YM pretty similar, and Russell actually a little bit bigger on the win than the loss. So kind of mixed results there on which side gets the bigger average result on the win or loss. But from the win rate perspective, it has not really been a bearish day the next day. It's leaned a little bit to the long side as a whole when you look at all of these together. So hopefully you found that interesting. Good luck today, and we will see you next time.